In this session, I'm going to take you through the Bikini Profile. So if you're a profile enthusiast, this one's for you. All right, here we have just a blank slide. Let's start by drawing what this looks like. So in the name really just is there to make this memorable. So if I was to draw a bikini, it looks like this. If I was to draw a Bikini Market Profile, it looks like this. So let's get rid of this one. All right, that's the name. The name is just meant to make it memorable. Now, what does this mean? Well, let's look at some features. Well, for a start, a profile like this, the market spent a lot of time auctioning the center. What it hasn't done is it hasn't spent much time auctioning either sides. So consider, or for example, maybe contrast this to, like your classic bell curve profile, or what some people have even called like a bread loaf profile. Now, just thinking about like where the market has found value. Here it's much wider, and here it's right across the range. And so we've got to then think about now how the market reacts around such a profile. So what happens on these bikini profiles is that for the market, to move away from this, because also by definition with all the volume in the middle, it kind of has tails on either side, right? So for a really good quality move away, the market may have to spend some time in here auctioning the area out to go. Now, another feature of this is because value is so tight in the center, that if the market moves away and fails, then the market's likely to be attracted back to the middle point like gravity. Now, this then creates sort of another feature, that this POC here kind of acts like an inflection point. So then the market gets back here, and either you're going to have a buyer at this point, and the market will base here and maybe auction out the area again, or the market will go through it and then push lower. And so then you're asking yourself, okay, well, I suppose we have a seller here now. So now the seller's taken up that, what was support point before. And that's more or less how you trade this profile. So you've got this value that can attract the market price back, and it can also act as an inflection point for trade. Okay, so let's go on to a real example of this. Now, this is the Bund futures. Now, this example is nowhere near as pretty as the diagram I drew on the previous page. So remember, the diagram on the previous page looked more or less like this. Now, what I'm going to tell you here is that in real life, things aren't always as nice, and this time we've got this bikini profile here. Now, if I was to draw that diagram again, this bikini profile more looks like this. And so it's almost got like a bit of a bullish skew to it here. Like we've got this kind of like blocky high, this buying tail down here. So maybe I'll draw it on the actual diagram. So here's this blocky high. Maybe I should draw it like that. And then this buying tail down here. And then we've got this inflection point here, which is the POC. And now, so this is kind of the feature that we're interested in. Now also, this is an inside day, so this bikini profile is inside this bigger day here. Now this is also an interesting point because, for example, you can then have sort of features of this inside day structure playing into the bikini structure, and that's what you've got. So here, the Bund opened up here, so here's the open. It traded around this region here. On the Bank of England, it bid into on the sort of the initial release of Bank of England, where it looked like things weren't changing. It then broke through the outside day high. It then failed and came back in. Now, if you remember what I said on the other page, well, when a bikini profile, when you have a failure to one side, then the bottom acts as an inflection point. So then you've got to ask yourself, okay, when we get back to this point and we're trading around here, do we get a buyer and it acts as support, or do we go through and then a seller takes that spot and drives the market lower? And so that failure that we got came from the the Bank of England, and then sort of coincided with this false break of this like inside day structure, and then it put this bikini profile back in play. So then if we swap to the other side where I've just separated out the TPOs, you can actually see some interesting things about this day. So this low here is really poor, right? It's almost a ledge. And in fact, the early morning low before Bank of England was a 2 TPO ledge. And then by the time it actually broke, the R TPO from the prior day and the N and then the O made a 3 TPO low. So by the time this is gone, you've got this bikini profile inflection point that's in play, this POC. You've got a 3 TPO ledge at the lows, you've got a false break of the inside day, and you've got this giant selling tail that's come from a Bank of England move. So you have quite a lot here pointing to the downside. The only thing against this trade is what I said earlier here about the bullish skew from this profile. So we had like quite a strong low here in this buying tail, and as you can see, this move actually stopped here. Now, if that wasn't the case, say this low was a bit blockier, then what can happen is sometimes you can get these double distribution days where the market goes and auctions out, this distribution fails, comes back down, and then auctions here, and the point where the distribution rotates around is the center of that bikini profile. Oops, sorry. Okay, so that's more or less the setup. So let's go and just quickly summarize what I've told you. So the market here is fundamentally bearish due to inflation, which I didn't mention before, but it's definitely something that's in play at the moment. But this sort of the offer and the bigger pictures become stretched and tired, and so the market's pulled back. So it's actually quite hard at the moment to understand the bias. So then what we're leaning on is the shorter time frame information, or like intermediate, I don't know, whichever word you use to call it, but over the last kind of week or so. And as I've used here on this page when I described it to you. Sorry, I'm going to go back across. So then we've got the selling tail from the Bank of England, which also created a failed break of that inside day structure. We've got the bikini profile inflection point at the 42s. But we have to keep in mind that there was that strong reversal low at 170.20s. So the trade idea is that the bikini profile point of control should act as an inflection point, and on the break, the market should test lower and could unwind the one timing bid from yesterday's reversal. So I suppose just to quickly clarify that, you can see that when we came off the low, we had this one time framing structure. Oops, sorry. One time framing structure here, the N's, the O's, the P's, back up to here. And so below that, we're expecting like a good knife down through that structure. Okay, so let's look at this on a smaller time frame chart. You can see here that I got short on the Bank of England up here once I realized that they were going to reduce QE pace. Here I misread something about inflation and got out of part of it, but ran some down to the bottom. That then later on set up this trade we're talking about. Now, the 142s, which is the bikini profile POC, is about here. And as I said, this was made into a ledge, and you can see like here is the low here. But some other interesting things. So from the morning, this would be the morning low here, which was a 2 TPO ledge. Then this bit here evolved into a 3. Now, what's gone on here is we've got this kind of structure here that's pressed against the lows. And so what the market's done here with this kind of wedge is and especially in this lower section here where it's really auctioned out this zone, in particular these prices here, has meant that the market has now gone and used all of the liquidity that's available around these lows. And that means that when the market breaks, it doesn't have so much of a reason to tick back, right? Because if the buyers wanted to do some buying, then that's all got kind of, all the interest has been traded out, the area's been well traded. And so then when we go, this market can actually go and not come back. Now, there are a few things. So one, we're expecting this market to offer. The second question you've got to ask yourself is, does this day form that, if I draw it here, that double distribution day that I was talking about? Or, and that we've got to ask, okay, if the market comes back, does a seller hold up here? And so that zone is, we're asking that question around here. And as you can see, this market doesn't hold. So what we're going to look at quickly on this recording of my ladders is we're going to watch the start of this offer and see how it goes, remembering what I said about how we've traded out these lows. We've had a nice auction there, so this market can just have a straight offer. And we're going to look at what the price action was like here and what that sort of tells us about then how the market will respond when it gets back to that bikini pop. So without further ado, let's jump into the ladders. Okay, so here we are at my ladders. The bund ladder is this one. And please note that while this example is on the bund, if you're trading S&P or any other market, the same concepts apply. And so you've really got to think, so just take the concepts here and just apply them to whichever market you're trading, because it's all the same thing. It's like it's really about the auction, which is the fundamental behind all the markets. Now, usually my ladders are a bit more full, but I went through a stage of like watching too many things and was starting to like decrease the quality of my trades. So I really stripped my ladders back. So there's only, as you can see, one ladder up here where I'm able to execute in. So I've took away the S&P oil just because I wanted to watch this market on this day. All right, so let's start this off. So 42s, that was the original low from the morning. Then I think 41s. That's the low in the ledge. So, right, you can see here that the market's now offered down to 42s, broke it, and I think, so 42s is the 2 TPO ledge, then 41s now becomes the 3. And so it becomes a 3 because, I think, it's because the time is being covered here, is just going to tick over into the next, into the next 30-minute TPO in the next 5 seconds. And so, all right, so here what we've got is a market that's then now pushed to the lows, right? It's auctioning right around the bikini point of control. And you can see there at 41s, the market just took that offered. And so there's quite a lot of size, 836 traded at the low. It's been taken offered. And so it's very likely now that this market needs to auction lower. So, all right, the market there bid up. So it took 42 bid, 43 bid. So sort of a couple of hundred lots into each price, 20 lots now into 44s. All right, now the market's seeing a bit of selling into 43s, 150, 170 lots, 43s are taken offered. All right, there's a bit of buying now at 43s. The market's keeping the price offered, now selling to 42s and 42 offered. So you can see now this bid sort of suggests, the offer is sort of showing us that this market's still heavy. All right, so now here we go. Bottom price 41s was taken offered. A bit of buying back into 42s. So remembering before it rotated up to 44. So on this time we've gone back to the lows. Now the highest rotation is 42. So let's see if the market can go higher. If not, then potentially this is looking really good for a sell. So there was a big order there, and you can see the market's gone straight through it, taken the liquidity at 40s. And then traded into 39s. All right, there's a bit of buying at 40s, but that was absorbed. And so what was interesting here was that the market just went straight over this price 41s and then never really rotated back into it, right? It just went through 41s, 40s into 39s. There was a bit of buying back into 40s, but the market just kept reloading. And so what that left us was this sort of low volume node in a way. And so that was what gave me the confidence to sell at that price. And again, like I said earlier, the fact that the market had gone and spent some time at the lows of that structure that we saw in the 1 minute, so this area was well auctioned, that gave me the confidence that when we bid out the lows and we left this little low volume node, that the way we'd auctioned up here facilitated that low volume node to hold. Okay, and so you can see now that the market's continued to offer. It's now selling, 700 lots into the low, which is again a really good sign. Now offering down into 36, 35. And so now 35 is taken offered, 34 is taken offered. And so you can see, we've got this really aggressive selling coming in. And so here again, I suppose like another thing, remembering that the Bikini Profile inflection point there was those 42s. And so at that point, you know, everyone who'd bought above is now wrong. And so now we're into a zone where I suppose we have that positioning offside that's now, you know, going and supporting this trade there. So you can see there was a big lot that chased the market up and then ended up executing at 37s. And again, you know, that low volume area is still much higher, and that liquidity, you know, it drove the market back a little bit. Then someone was willing to, you know, to sell that many lots, and the market absorbed it there at 37s. And so I'm just going to leave that part there because I think, you know, this offer's pretty aggressive. It doesn't really rotate back, and it looks more or less like what we've seen. So it does have, actually, it sort of goes down, it goes a bit like this, and then it just, and that's what it looks like. Oops. Almost dropped the pen. And so that's, yeah, that's how it offers. Now, the next part we want to look at is how the market reacts at the lows. Now, also, the other thing to note that I didn't mention earlier is that this, I'm playing back at 1.5 times the speed, so the bund's not usually quite this fast, but just for the sake of getting my point across faster and saving everyone time, we're playing it at 1.5. So now we're at the lows, and we're about to see the low of this move be made, and then we're going to look at how it reverses off. So right now the market's just taken 25s offered. There's kind of just like a small, almost like a teasing offer there, but we're seeing like 700 lots trading. So someone's willing to buy there, but someone's also still really willing to sell. So then we got 1,000 lots traded there, now 1,300 pretty much, and it's still taking offer. All right, and there we go, straight through 24s, 23s. And now we've got to know, well, okay, if this wants to continue, we need sellers to keep driving lower. Remembering that here, this price 20s was the low of that really strong reversal. So now the market's taken 24 offer, but there's only a really small offer. And it's almost like the market's, like the sellers have lost their confidence. They're now putting these small kind of like weaker offers at the lower price. You know, it's almost like they're sort of trying to test and gauge the liquidity. Maybe this is the market makers playing with the order book. I'm not sure. But either way, the firmness and the kind of conviction in the offer has definitely changed. Now we've got this buying. So 26 is taken bid. Immediately, all this liquidity is pulled, and now 27 was bid as well. Hardly any size now being offered at the 27s. 27s are taken bid. And now look, immediately all the liquidity comes out of 28s. And now 28s is taken bid. Again, the liquidity's come out of 29s. 30 lots traded higher, 3 lots traded down, 2 lots traded back up. Still hardly any liquidity on the offer, but lots on the bid. So now maybe it's everyone that's got short is looking to take profit and now stacking up the bid, but no one's really selling. So we did see there, as I say that, which is always the way, that we're getting 600 lots sold. But you can see the bid's thick and just absorbs it. Then immediately 200 lots into 29s, and 29s taking bid. So now 30s taking bid. And so you can see there's this really rapid sort of change in the auction here. It all came from just this kind of like uncertainty down in that zone at the lows, where the buyers, you know, had that last sort of like shot through the lows, and then nobody continued to sort of step down. And so there's a bit of two-way there at 31s, taken offered now, and 30s taken offered. Then immediately 30s taken bid, all the liquidity comes out of the 31s. And now we've got to see, look at that, 32s, 33s, and then buying the 34s. 33s taken offered. There's like sometimes the bid at 32s just kind of gets pulled a little bit, maybe to make the buying look a bit weaker. You can see that again at 31s. But then what generally follows that is that the market just buys. It's almost like make the bid look weak so that the sellers come down a bit, think that maybe this can happen, and then they just take all that liquidity on the offer and then drive higher, as you've just seen there. So that time, I suppose, my explanation got perfectly shown on the ladder. So, okay, and so that's that. So let's now just go back to the slides and put what we've seen back in context on 1 minute. And so what we saw is this really nice offer down here. And then what we saw is there was this kind of like questioning of the trade, the buyers and sellers just testing each other's conviction, right? Which is what, sorry, it's meant to be a question mark, as they try and learn something about each other. And then as soon as it's found that the sellers they aren't really there anymore, then this offer gets pulled. Now, this bikini POC is about here. Now, if this is going to form a double distribution, if this offer is getting pulled, you would expect lots of absorption in this zone, right? Because if it's being pulled, but the market's still bearish, then it will be a big buyer pulling the offer, and then going absorbing it here. So sort of everyone who's got short in this zone here, I'll take this off. So everyone who's got short in here, and I suppose continues getting short as it gets lower and dragging their price down, then gets forced to puke their position, and which drives the market higher, and the seller is able to get all that size, all that liquidity from the market at a much better price. You know, they're able to sell a higher price, so it's sort of attain better value for themselves. Now, what didn't happen was that, and instead of somebody absorbing in this zone, the market continued, or the sellers or market maker continued to pull liquidity from the offer, and the market went back through the bikini point of control, which was up here, and that's where I got out of my trade. And so, yeah, that's basically how you trade it. So now we've sort of gone over what are bikini profiles and how they're formed, which is formed by sort of over-auctioning a tight range. So this over-auctioned area acts as an inflection point. So that's this. We've sort of got too much auctioning here, not enough auctioning there and there. And so that's basically the structure. So then if you think about how should the market trade, well, it's already auctioned the middle part. Eventually it wants to trade there and there. And then the center acts as an inflection point. Oops. Okay. And so what I showed you after that from the bin was a real life example. Now that real life example is very much imperfect. There have been better examples lately, like there was a big bikini profile in the Oil Weekly, maybe about a month ago. And so, but that one's a little bit harder to talk about because the time frame is so much bigger. Now, but that's something you could go and have a look at. And so the thing I want to leave you with is just from the theory that I've explained to you today, can you think of other ways that you could trade around a bikini profile and that you could use this concept? Now, what's really valuable about this is just that if you've thought about it before the time comes, then you're able to react in the moment with that kind of confidence and conviction that you need when you're trading. You can't think through this concept when you're presented with it in the market in real time. You had to have done that thinking prior. So I suggest that that's your takeaway, your little bit of homework. Go and have a think about that, and and then hopefully this helps you make some money next time that you see a setup like this. All right, that's all I've got for you today. It was really interesting talking this over with you, and I'll be back with another one of these for you next week.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies, and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.